correction can be severe.
So you're hedging your bubble bets.
Yes.
Patty.
Well, I think the questioner assumes that markets are efficient and people are rational, but in a bubble, what you get is irrational exuberance. So people extend the price trend and think it's going to go on forever. We saw it with tulip bulbs. We saw it with .com. We've seen this movie many times before. But I think the other thing about bubbles, Peter, is they're very obvious with 20/20 hindsight. So once it bursts, then everybody says, oh, that was clearly a bubble. So I think we have to listen to that. But the other thing is that right now, lots of people outside of Canada are saying we have a bubble. But inside Canada, the consensus amongst bank economists anyway is it's not a bubble. It's overvalued by maybe 5 to 10%. So we'll see ultimately who's right. And maybe that's cold comfort. I'm not sure.
All right, another video. Here we go.
This is Joel Gunther from Oshawa, Ontario. We hear a lot of talk about the general fear that we're living beyond our means. Do you think it's a bad idea to pay out other debts by adding to your mortgage? Thank you.
All right. Who wants that one?
I'll take it.
Preet, go for it.
Yeah, it's a great question. I mean, consolidating your debt by taking high interest debt and rolling it up into the lower interest mortgage makes sense mathematically. The problem is if the people who do that, there's a high rate of failure. And what I mean by that is now they've got access to more credit on their credit cards. And if they get into the same pattern, this starts a very vicious cycle. So if you can truly change your behavior, then yes, it makes sense. But if not, and you have to be honest with yourself, it's a recipe for disaster.
All right. Here's one from Gus Watson in Vancouver. For you, Amanda. Home ownership is a retirement nest egg for many Canadians. Recognizing that we have the baby boom cohort moving its way through retirement years, birth rates below replacement level, low immigration rates, and overall reduction in well-paying jobs, what will the convergence of these factors be on retirement plans of those counting on real estate to carry them into their golden years?
I think this is a really important question, and I should note that economists differ on this, the effect of immigration and the like. But I'm in the camp that's concerned about baby boomers who are sitting on homes that they hope will fund their retirement, because there is a scenario in which there's this whole cohort that is not selling their big home. Normally, they all sort of downgrade to something smaller and move. They're sitting in them now. They're not downgrading. And the question is, are there people willing to pay the price they expect to get? And that demographic question is a real one. Immigrants tend to be lower income. Younger people are lower income. We know that there's a wealth disparity. I would worry. If you were in your 60s, 70s, sitting on a home that you count on for retirement, my advice would be think about selling it at these robust prices and finding a place you want to live.
All right. We got to take a quick break, but we've got more of your questions and this one. What single issue could make the housing landscape we see today change in a dramatic fashion, one way or the other? Well, welcome back to The Bottom Line. On house prices tonight, Patty, Jim, Preet, and Amanda are all here. Preet, you get the first question. Don Purchase from Ottawa. I'm interested in buying a condo for retirement. However, I don't understand why condo fees can range so widely. You and me both, buddy. What's the answer here?
It's a function of the amenities. So if you have a swimming pool, a bowling alley, concierge, a home theater room, the condo maintenance fees are going to be quite a bit higher. And also, I would warn people with pre-construction condos and they have an advertised maintenance fee. We're finding that those maintenance fees can double in the first 3 to 5 years. So make sure to budget for that.
Okay. Jim, you get this video question.
Will the recent drop in lending rates just cause more Canadians to overborrow, causing a future crisis to be even worse?
That's a worry a lot of people have.
Short answer, yes. There's no doubt about it. Lower interest rates means people can afford a bigger house and they're willing to pay for it. And it's, in a way, a diversion of the stimulus effect that we want from lower interest rates. We actually have a weak economy and need for lower interest rates, but we want it going into real production rather than house inflation. So it is a worry, and it's one of the reasons we need other forms of stimulus in our economy.
All right. Patty, this one from Twitter, Steve Mantis. What effect has the shift in income inequality in Canada had on home ownership?
Well, presumably it's squeezing lower income Canadians out of the housing market, although we don't see that in the home ownership rate, which is close to 70%. But I think a symptom we are seeing is recently there's been a burst in construction of apartment buildings. We haven't seen that for years. So in Toronto right now, there's 21 buildings under construction. 2 years ago, there was only 12. So I think this may be a sign that people can't afford housing, so it's back to renting in a big way.
So there has been a burst, at least somewhere.
Yes.
All right.
Not a bubble, though.
Right. Amanda, Richard Spittle from Vancouver has this on Twitter. If the bubble bursts, will the economy be worse than the 2007-8 crash?
Absolutely not. Nobody thinks so. That was a global phenomenon. If the bubble bursts, it may be painful. It may hurt our economy, but absolutely in no way like that recession.
All right. Quickly from each of you, what single issue could make the housing landscape change in a dramatic fashion? Patty?
Higher interest rates, not happening anytime soon.
Okay. Jim?
Canada-wide recession, a lot of people will lose their jobs and then lose their houses, possibly.
Preet?
Jobs.
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 I'm watching inflation. This level of stimulus, inflation generally follows. It goes to Patty's point. It's higher interest rates, but I say nobody expected the Spanish Inquisition.
They didn't.
The Monty Python
I was there.
quote.
And I tell you, it was a shock to all of us. All right. Thank you all. It was great. And welcome to our Bottom Line Web Extra. Patty, Jim, Preet, and Amanda all here at the table with us. We got a couple of extra questions that we didn't get to on the televised program, so here you are with a Web Extra on Bottom Line. First question comes from Kincardine, Ontario. Thomas Shield. Does the Bottom Line think that the big banks, with their large exposure to mortgages and house-related debts, are presently a good investment for a retirement portfolio? Would you buy bank stocks right now on the perceived cusp of a faltering housing bubble, or would you wait? Patty?
Absolutely, I would buy them right now, and I think they form a bedrock of a retirement portfolio. And actually, right now, they're kind of on sale because over the last couple of months, they've been under downward pressure. But if you look at the Canadian banks, they are well capitalized, they're strongly regulated, and they are prudent lenders. And in addition to that, right now, the average yield, dividend yield on the big five banks is a juicy 4.2%, much higher than interest rates at these levels. So am I worried about the impact of a crash in housing? First of all, I don't think there's going to be a crash. And even if there were, if house prices, say, fell 10%, there would be an impact on banks. Consumers would be more cautious, but not a big impact. So my answer is, short answer, is yes, buy the banks. They're part of your retirement portfolio.
You agree with that, Preet?
Well, listen, full disclosure, I'm an indexer, so I don't pick any individual stocks and try and figure out what's going to do better.
There's a lot of banks in the index.
There are, but I own them all, right? So I don't have to worry about that. But what I would say is, because the banks have such exposure to real estate, if there was a downturn, it probably would be relatively short, maybe 5, 10 years, something like that. You might see some softness, but over the long term, which is how you should always think about an investment portfolio, they're going to continue to be a big part of the economy. And certainly, I wouldn't be against buying banks. But again, I'm an indexer. I don't try to think about these things too much.
Never thought of you as an indexer. But now we will.
He knows so much. That's why he's an indexer.
Yeah.
Yeah.
He does know a lot. You're really promoting him tonight.
It's true.
Checks in the mail, Jim.
All right, here's your question, Jim. Comes from Vancouver, Bill McGrath. Should the federal government get back into the business of subsidizing housing development for lower income Canadians, people on social assistance, on disability, and the working poor? Thanks for picking up on this issue. The situation here in Vancouver is desperate.
I'm so glad we got that question, Peter, because, we talk about housing prices and everyone's thinking, well, when should I buy? When should I sell? We often forget a huge number of Canadians don't even have that option, let alone buying a property and getting the down payment. Many of them can't afford even to rent. They estimate that about 15% of Canadians have what's called core housing need. That is to say, they can't buy even a rental or rent a small apartment for less than 30% of their income, and that's obviously worse in a place like Vancouver or Toronto. There's 300,000 Canadians homeless. So I actually think it's a great time to get back into social housing. That includes public housing, NGOs and community housing. Housing co-ops are a very effective form of low-cost housing. Among the benefits, you're obviously helping people who need housing get it, but you're also putting some sort of damper on the house price inflation that you're seeing elsewhere in the real estate market and creating jobs in the construction. So I think it's an excellent idea.
Amanda.
I do think, I'm glad we got the question too, because we can get kind of consumed with this idea of sort of a certain swath that's buying and selling and investing, and we need to support a whole group that can't necessarily own homes. I don't think that direct support for homeownership is the way to go. Federal support for building housing stock that is available to people that can't afford to live in a house is great. If you want to subsidize housing, I believe, and I think economists would back it up, you should do it directly. So vouchers to people rather than giving them a place to live. But we can kind of quibble over how you get there. What we know is that even in our biggest cities, even apartment stock is not what it should be for people that can't afford a home to live in. And then you get into people who have trouble even renting an apartment. So this is a social question. It's not going away. And by the way, it used to be that we had this conversation about, young people, people at the lower, elderly people are going to increasingly need this as well. So it's going to be a conversation we're going to have.
All right. Thank you all.
Thank you.
A couple extra questions for this special Bottom Line Web Extra. Hope you enjoyed it.